Now, this video is definitely going to be a little bit different, as you guys see in the title, what I would do if I first started trading and what I would do when I started over and everything like that. Now, it's probably way different than what most people think this video is going to be about. There might be a lot more people that disagree with me on this, but again, this is how I would start over and how it would help me and my mindset and everything moving forward so I could progress quickly with a proper foundation. And I'm not talking about the regular, the 2% rule and this and that. No, like I'm telling you through a mindset perspective how I would actually trade if I started over. And hopefully this might help people that are struggling right now. So let's get right into it. Now, again, no fancy edits. I'm going to go right into it. It sounds so weird on camera, but the biggest mistakes that I see a lot of traders make is number one, risk management, right? Number two, just like overall position sizing and everything like that. Now, if I started over, here's exactly what I would do. I would have an account with $1,500, maybe $2,000, and I would either have an automatic stop loss either from DAS. I would probably 100% get DAS just because of that stop loss feature when I first started trading, because it would automatically stop me out at, let's say, negative $50 or negative $100, so I won't blow an account, because that was my biggest problem. Every time I took a trade, it'd be green, 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 green. Next trade I take literally wipes out the entire week's profit. So DAS will help me to get rid of that problem. So that's the first problem. Now, we have that out of the way, right? That risk management. That would help me when I first got started. Now, the other thing is, and this is going to sound crazy, but I would only take at max 2 trades on the day, but it would be 50% of the account every single trade. So I would take a trade. Let's say we had an account of $1,500, so that means 2 different trades, $750 each, $750 each. It sounds crazy. I'm just telling you exactly why I'm about to do that and exactly how that will help me if I started trading over. Again, it's different than most people, but again, only 5% of people make it trading. So if I'm telling you what is like the craziest thing ever and what 95% of these people aren't telling you, there gotta be something there. If I'm telling you what 95% of people tell you not to do, what 95% of people will never tell you to do, and just will never say what I say, then there must be something there if only 5% of traders actually make it. So, with that being said, I got 2 different positions, right? I'll take at most 2 different positions on the day, $750 each, half and half of my account. And with that being said, I'll have DAS automatically stop me out at a $50 loss, which means at most, I will lose $100 on the day, which is not a lot compared to what you might have thought was a lot. Because the reason why I 50% the account every trade is so that I don't take another trade after those 2 trades. This will automatically force me not to take another trade, and at most I can only take 2 trades. The biggest problem is revenge trading, right? You took a loss. Oh, you took another loss. You know what? I got more buying power. Let me take another trade and then another trade. If I use 50% on my account, I could take at most 2 trades, which means I will only lose at most $100, right? And my biggest problem was I wasn't sticking to my risk management. DAS will automatically do it for me, right? So with that out of the way, I can't revenge trade because this is all in a cash account. I can't go past my stop loss. My stop loss is very small. A $50 loss for a 750 position size, that's like around 8%, right? And the way that I trade, that's perfect. And for my profits, I'm not allowed to sell until around 20%, 25%. Now, what this will do is this will force me to get the proper risk to reward. I need at least a 2-to-1 risk to reward, right? At least a 2-to-1 risk to reward. 3-to-1 is definitely ideal for me when I'm first starting. I mean, this is literally how I trade right now, except I don't 50% my position size because that would be insane. But when you're first getting started, this is exactly what I'm literally telling you exactly what I would do. Because if I get a 3-to-1 risk reward, let's say, for example, the trade that I took today, I made 31%. I would have took a stop loss of 8%. which is around a 4-to-1 risk to reward, which means that if I did that with me first starting out, number one, I wouldn't have trimmed, and like I did today, I didn't trim at all. That's exactly what I would do. I wouldn't trim, right? And people are like, oh, I need secure gains, I have a small account. Ride it, right? Just ride it out. Wait for the chart to tell you to stop out. Now it's either, you lose 8% or you make 20% plus. So if I did what I did today on the trade and I made around 32%, let's just round it down to 30%. If I made 30% of my $750 position size, that means I made $225 for a $50 risk. Remember, no trims, and it is totally possible to not trim. I only have one contract. It doesn't matter. I have hundreds of contracts and I don't trim, right? Literally, like, for example, today. It's rare that I trim, right? I don't really ever trim anymore. But if I do, it's super rare. So it is totally possible. It's just an excuse. You have a small account. I only have one contract. So just stick to your plan, right? At least a 20% gain is exactly what I'm looking for, right? Or I'll stop out at 8%. I'll risk $50 to make $225 any day, right? That is a very proper risk to reward. And at most, you could lose $100, right? So let's make it even more conservative. Let's say you make 20%. That means you'll either lose $50 or you'll make $150, right? So it's kind of making sense. If you take one green trade, you'll make $150. If you take two red trades, which is your maximum that you're able to take, right? Because everyone's like, oh, you need to stick to your 2% rule. At first, you're not going to be able to stick to anything. You're not going to be able to stick to anything. I wasn't able to stick to anything. I wasn't able to stick to my risk management, which is why I'll go 50-50. So I literally can't go past, the $100 stop loss. And DAS will help me to take a $50 loss every position size. And that's it. That's the most I could take. Which means that if I take one green trade, that makes up for, let's say the previous day I lost twice, which means I would have lost $100. I would still be up $50 in those 2 days, which is like, it's insane to think about when I first started, because I would literally take a win and then I would take a loss, and that loss, I would need to take like 5 different wins just to make up for that loss. And by the time I get to that 5th win, I'm now break even, and then it just messes with your mindset. You're like, all right, I'm good now, and then we just crash again. But this way, I could have a 50% win rate and still be far more profitable than what I was doing when I first got started. Because if I have a 50% win rate, I make $150 and I lose $50, which means that I made a total of $100 with 1 win and 1 loss, which is huge compared to what we're talking about right here with our account. Because if I made $100, that means the next day I could literally lose both trades and I'll still be break even, which is insane. It's usually the opposite. It's usually I would need like 5 different wins just to make up 1 loss. So that's exactly what I would do when I first got started, right? Let's sum it up. I would have a $1,500 account. I would take 2 trades at most. And when I take the 1 trade that's a winner, I would stop. If I'm up $150 in a day on that 1 trade, I would stop, right? That's it. I'm done for the day. I wouldn't try and do anything else on the next trade. I'm done on the day. So we have DAS or whatever you're using to automatically stop me out at a negative $50 drawdown on the position size, which is around an 8% loss on the position size itself. Now, my take profit is at least 20% plus, right? 20 to 30% is usually probably what I would look forward to. If I get more than that, I might actually start becoming greedy or something like that. So you just want to be patient with it and just stick to that 20 to 30%. With the 8% stop loss. Like, this is literally the game plan. Like, I wish I was able to get this video when I first got started trading, because I'm telling you, I would be 20x where I'm at right now. If I got this video sent to me when I first got started, I would be at a much better place right now than I am already. The market has definitely blessed me already. It would be even better if I got sent this video. But again, that's my plan if I first started trading, and it's not like everyone else's plan. Oh, the negative 2%. Oh, the don't use more than 10% of your position size. But the way that I'm approaching this will actually help me with the stuff that most people deal with, and it's hard for you actually to stick to that plan. If I use 50% of my account, that doesn't mean that I'm going to take a huge hit on my account. I'm only taking a $50 loss every single time, which is around an 8% stop loss. So it really doesn't matter if I'm able to manage my risk and my risk to reward makes sense. So that's exactly how I would do it. Let me know in the comments down below if this helped you. Or let me know how you guys like my approach to me first started trading. This is exactly what I would do no matter what anyone says. I think this would help me the most just because it's able to help me learn the foundation, actually help me learn how to manage my risk, manage my reward, and actually not blow an account. And it will allow me to not just keep trading all day or revenge trade because I'm taking 50% of my account, which at most you could trade is twice a day. So I think this is a perfect way. Make sure you guys subscribe, leave a like, and I'll see you guys tomorrow.